Hey guys, we'll give it a quick second. It's funny, Brandon, you were doing an interview and running all around, and I've actually this is my third hour-long presentation
Yeah.
talk or whatever in a row. So I don't know about you, but I feel like I'm getting pulled in 1,000 different directions, and I'm glad that actually, made it here
Yeah.
at the right time.
Yeah. No, I can definitely relate to that. Kind of being spread thin. Sometimes that's a good sign though. It means that you're active, means that you're busy, means that you're in high demand, which you are, my friend. So yeah, I can definitely relate to you.
Hey, we're just out there shaking the bush, trying to make things happen each and every day
Mhm.
because at the end of the day, entrepreneurs, it's the fun
Yeah.
part of life. Let's just make it happen.
Yeah, let's do it. Let's do it, man. You're looking good, man. You're looking sharp.
I appreciate it. I decided it was about time to cut off
Yeah.
the whole mop that my lovely wife said, it's your birthday. We're going on a trip. And the only thing that I ask is if you quit looking like a hippie. So
Yeah. That was
I
kind of
had to
your that
give
was kind
in.
of your signature.
You know what? It was actually COVID hair. This has always been about what I've had. And then I went with the COVID hair, 6 months without a haircut. I'm like, hey, I kind of like the longer hair.
Yeah, yeah. I tell you what, and still kind of have a COVID beard because, to be honest, pre-COVID, I never kept my beard this height, and so I'm getting signals that I need to switch back myself. So yeah, maybe it's time to tighten up, I guess, huh?
I hate to tell you, it's official. COVID's over.
It is. It is.
It's time
Thank
to get
God.
back to normal.
Mhm. Yep.
Well, thank you everybody for joining today. We're covering some really important stuff. Branding,
Yep.
your personal brand, getting it launched, what to consider, what's the process. And that's why we've got the man here, Brandon Jenkins. If you don't mind, I've given my background way too many times. These guys actually really don't even care who I am. But could you share a little bit about your background?
I sure can. Would love to. So I'm Brandon Jenkins. For those of you who aren't familiar with me, I live in the DC area here with my beautiful wife and my wonderful children. Excuse me. Talk about being spread thin. Um, but yeah, so
3, 2, 4
yeah, somewhere around
kids.
there. So yeah, so my background professionally, I like to kind of tell my origin story because that kind of leads into here's where I'm now. So professionally, started off as a petroleum engineer. And so I worked in oil and gas. I worked on drilling rigs. I worked onshore. I worked offshore. Like if you remember, kind of the movie Armageddon, right, where they were drilling um, using that rig, and they kind of exaggerated some of it. But so I did that for some time. Really enjoyed it. Really good business. It's one of those industries where when things are good, they're really good. But when things get rough, they start to immediately reduce headcount. Okay, and so I noticed fairly early on in my career that hey, there's something here that I need to kind of do something to offset, right? So there's this unemployment risk I need to offset. So I started to invest in real estate on the single family side originally, which I really enjoyed, but I wanted to scale, and so my focus then became, well, how can I scale? How can I get more doors, more units, as we call it, in fewer transactions? How can I leverage economies of scale from an operational and a cost perspective? And so I started to look for apartment deals. So at that point, I was looking for deals for myself. So I would just kind of go out and see if I could. I put an offer on a few, and none of it worked. None of it they all fell through. Around that time, one of my coworkers reached out and said, "Hey, there's this thing called syndication deals," which I had no concept or no knowledge of. And I know we'll talk kind of about what that is. But so at that point, he and I went to some meetups because I lived in Houston at the time. We went to meetups where he and I were able to learn more about them. Then we started to invest in them passively. Fast forward to now, I'm an active investor. I'm a multifamily syndicator, among other things. I'm a coach and a few other things. And so that's what I do now. And which is interesting because, we'll kind of dig into the journey, I know, but it's very important because going from being kind of taking that corporate route to then now being a full-time syndicator, there are a lot of skills that I actually have brought with me to where I'm now. So
Love it. So today, I totally forget what we're going to talk about. No, just joking. I know we're going to talk about three really important things: your personal brand, building an audience, and I'm really going to touch and share. You know, this is, you're out there trying to raise capital. Sometimes you need to build the audience. You need to talk about investments. You need to talk about things to get people to engage, which is at the end of the day what's incredibly important. So I'm going to talk a little bit about making sure that you're staying compliant with how you're talking about investments, making sure that you're staying out of trouble with investments. I will say, we do have some materials available for you, and you just go to this QR code. I will leave it up here for a few minutes, just kind of FYI. I do include in there a helpful chart just so that you understand some of the laws. I include in there a testing the waters disclaimer. We'll talk more about that. But anytime you're out there advertising, before you have all the legal stuff set up, there's certain disclaimers that you need to include. So go through this QR code. We'll post what the link is also in chat. But here's the information for you. Also, I think, Brandon, do you have your presentation or something that is being made available for everyone as well?
yeah, I do. I actually have. It's basically kind of a guide that's like a capital mastery guide with basically kind of helps you. It provides a framework of sorts on how to exactly engage with passive investors. So if you're someone, you're looking to potentially raise capital for your deals, there is a way to go about that process so that you build trust with investors, so that you are effectively a trusted guide. I think we're at this point now where skepticism is at an all-time high when it comes to kind of anything being offered, and in a sense it should be. And so there's a way to position yourself then as an authority, as a credible authority, but also someone who has empathy. Okay, and so you are, instead of talking at someone, the goal is to offer value so that you can then be a guide on their journey to build wealth. So we have about I think it's like a 9-page or 10-page guide that will kind of help kind of lead you through that.
Perfect. And if you don't mind, Taha, I just dropped that in the chat as well for everybody to have direct access beyond the QR code. I'll share that later on as well. And I will say, if you have any questions, comment. You'd love to just, find out what Brandon does to take care of that magnificent beard. Put it in chat.
Yeah, I'll drop a coupon code for you to get the same beard cream.
There you go. Well, I'm going to step back for a little while. And if you do you have a presentation that you'd like to give?
Sure. I can I'll tell you what I'm going to do.
If you do, great. If you don't, we can chat about it. But
I do have something here that I want to share that is available here. Give me 1 second. I'm sorry. But yeah, it's something that for me it's going to give everyone here kind of a good visual of how you build a brand, how you build up, like I said, that credibility. You want to build trust with your investors. And so let me grab this and take just a quick second. Promo. Webinar, and there we go.
And all you got to do is press the little present, and it'll allow you to share that as well.
Okay. All right. See, present.
And while he's searching around, what we're really talking about and focusing on today is, if you need to raise equity capital, you need to raise money to acquire an asset, whether it's real estate, maybe you're buying a business, maybe you're buying racehorses and bringing in investors, or art. All of these types of assets, you can pool and bring investors together. It's a securities transaction. There's a lot of rules around what you can say, can't say, the ways to market it. And we keep covering those because at the end of the day, the more deals that you can do, the more investors that you can find, the farther your entrepreneurial, your real estate, your business gets along. So that's really why we're focused on this today. And eventually, I'm just going to keep blabbering on until Brandon figures out what he is doing.
Yeah, it's uploading now, so it should be. It says it's an issue with the. Here we go. Hold on. Let's share. So I want to share my screen, but I hope it doesn't show the edges of it. And it is, isn't it? Is it showing the edges of it? I'm trying to get in present mode here.
Yeah, I think it's all right. Here, I'm adding you. Yeah, it shows the edges. You're good. Roll with it.
Okay, let's roll with it. All right. So let's get past this. All right. I like to tell, I'm going to share a story with you because I think, again, this is something that's kind of relevant to setting the stage. And so this is a personal story for me that maybe you can connect with. So, you know, as I mentioned, I worked in oil and gas for a number of years, but I remember that I got laid off in like 2019. Okay. And it was a difficult time for me. It was an extremely challenging time. It was one where I did a lot of self-reflection. Okay. And I'm going to kind of jump past some of this, but it is, again, integral to my story and kind of what got me here. Because the one thing that for me allowed me to not look like this gentleman here with my head held down in my lap all the time was that I had actually started to invest in real estate before I got laid off. Okay. And so this isn't, you know, kind of me a pitch to convince anyone to go down that same path. But I'll tell you that being financially sustained through your investments is something that is, it kind of goes beyond just the things that it can get for you. It's really peace of mind. It's really stability and other things. And so that was something that was very important for me personally. My personal journey was that my investments, both in single family and in syndication deals, helped sustain me. And so I knew then that this was something that I wanted to do long term. Okay. So I'm going to skip right down to something here that might be a shocker for everybody. And that is that we are all in the real estate game. Okay. Whether you are a renter, whether you're an owner, whether you're an investor, you know, it doesn't matter. You're in the real estate game. This isn't something that you have the option of sitting out. Okay. And so really what it kind of boils down to, though, is one word, and that is control. Okay. What's the level of control that you have over your involvement in this game? Okay. It's whether or not you are, again, on the side of the table as the investor, or whether you're a renter, whether you're, regardless of what your position is. And so I think it's important then to really have some something, that a resource or someone that you can turn to as a guide. And so I'm going to tell you another story. So my wife and I, we have 3 children, as I mentioned. We have 2 older daughters, and our youngest is a boy. And our 2 daughters, when they were born, they both had to go in NICU for a short amount of time. Okay. And so when we were in NICU, you know, as stressful as it was, we had a full suite of nurses that would watch them around the clock. And so it was beneficial to us, especially me, because I had no experience whatsoever in changing diapers or dealing with babies or any of that. And so I got to see kind of how the pros did it. But fast forward to when they were able to kind of be released from NICU and we could take them home. In both instances, we got them home. We were kind of concerned now because we didn't have nurses on call the whole time. With our first daughter, I remember we got her home and she started crying, just like crying, she was inconsolably. And so we tried to feed her. It didn't work. We tried to burp her, tried to, rock her to sleep. And my wife and I stopped and we just looked at each other and we're thinking, like, what in the world is going on? What do we do? Well, it just wanted to highlight, I mean, the challenge there was that we didn't have the right guide. We didn't have the right person, the right resource to really say, hey, these are the things you need to do in order to get on the right path. Okay. So that's kind of what what Nate and I, what we're looking to do here is just to give you sort of a framework that will help you understand, how do you build a brand, how do you do things to attract investors to your platform, to your brand, and then also what is the right way to then go about raising capital if that is your goal. Okay, this isn't something that you want to go and just do alone. And like Nate mentioned, from a legal perspective, you absolutely can't just go out and start putting materials out there without the right guidance, because it can land you in some pretty hot water. Okay, so it's a skill that's very important to kind of understand. All right, and so the three things that I want to share with you really quickly is how to avoid getting burned out. Okay, because you can very much do so, especially if you're kind of having a more personal touch and approach to raising capital. I want to talk about the three steps that it takes to become a capital magnet, and then also the 5 keys to attracting 7 figures in private capital, or whatever your target is. Okay, so the first thing is, a lot of people have it wrong. So I've been investing in this space on the active side for some time, and I have seen quite a few investors. They want to find the property first, and then they go and try and find the money. And I'm telling you that that is the absolute wrong way to go about it. That is the sure way to end up that you're going to end up that you will lose the deal. Okay, and so the whole "if you build it, they will come" approach. I know it. It's from it was a great movie, but that quote, it doesn't work. It doesn't carry over to the real estate space. Okay, you have to be intentional about it. You have to make sure that you source the equity, source the capital, build your brand long before you have a property lined up. Okay, that is the right way to do it, and we're going to talk about how you do it here in a moment. And so, what I like to tell people is, and show people, you really need to learn to attract capital. Okay, it's not about chasing capital. The goal is to attract it, and so there's some ways to do that that can really help kind of clarify your position, but also help you have an easier way of it. So the two things that you can do, first off, one is to clarify your value proposition. Investors need to know and understand in a fairly short amount of time how exactly you can add value to them. The second thing is to educate your network. So speaking specifically about real estate syndications, especially the asset type that I focus on is apartments. So apartment syndication is very much an education based undertaking, and without taking the steps to educate your network on exactly how the process works, but then also specifically how you work, without taking the time to do that, you can really miss out on what would be an opportunity. Okay, so those are the main two things to focus on, and we'll kind of dig into those here in a bit. Okay, so the first thing, right, is your value proposition. And one great way to do that is to really package your story. And I call it an elevator pitch, but it's really just kind of about packaging kind of who you are, what you offer to the marketplace. Okay. And it needs to be quick. We're in a time right now where people expect quick results, or at least quick information. So
How
why not
long?
have how long? I would say I'm thinking about 12 seconds, Nate. I mean, if you can't very quickly convey, exactly what it is that you offer, the value you offer, then people are going to pull up their phone. Okay. The average, I read somewhere the average attention span is about 9 seconds. Okay. Before the
8 seconds longer than mine.
yeah, that's right. I mean, if you start to see people's phone come up, or if you see their eyes kind of start to veer away from you and then down to their phone, you've lost them. And so the way to do that is very clear. And here's a framework, right, of sorts for doing that. Number one, what is your job? What is your role as an investor? Are you an active investor? Are you do have a fund? Do you invest in single family, multifamily, self storage? The other one is, what problem do you solve? You have to be very clear on that. So investors are interested in several things, right? One is tax savings. That's probably one of the most important ones. Cash flow, right? Equity build up. Um, you have impact investors that are interested much more in making an impact on the community, things like that. But regardless of what it is, you have to very clearly say, here is the problem that I solve. And then you have to be okay with the fact that you may not be able to solve everyone's problem. So
Do
if you
you
have,
change your pitch based on who you're talking to? And if so,
Mhm.
how do you know? How do you say, okay, this is what I'm going to pitch at this point?
So I have the short answer to that. To me, I think it depends, right? Uh, I like to be consistent. Okay, now if I need to know the room that I'm going into. So if I have a target investor that I say, this is the group that I want to help. So if I'm someone that I want to help engineers, or if I want to help medical professionals, then I'm pretty specific about the rooms that I go into. So if my goal is to help offer value to medical professionals, then I'm not necessarily going to go to, say an event where there are a lot of athletes or something and say the same message. But I also would be very clear with the room where I intend to have these kinds of conversations. So that's kind of my response there. I think it does it helps to have a focus, because then your message, your brand, your platform is very much catered to, hey, here's how I can help you. You start to get confused when you say I want to help everybody, and therefore my pitch changes depending on who I'm talking to. At least that's my stance on that.
And to rephrase in a way that I've take personally, you can't be a generalist, a jack
Mhm.
of all trades. It's like hiring an attorney that does absolutely everything, but he doesn't really know anything.
Yeah.
Hiring a specialist, being that specialist, being specific and targeted will always get you farther.
Yeah. Yeah. It's the difference between kind of, speaking into a room, or what is it? Well, I forgot what the phrase is, right? It's like, but it's basically the difference between kind of having, filling a room with one specific type, and then having a room with really no one in there that you're kind of speaking to, because you just haven't clarified who should be in the room with you. Yeah. So then the other thing is being clear on why they should invest with you. I think the number 4 and number 2 here kind of there's a tie, because it's about the problem you solve, but then it also speaks to, hey, well, why should they invest with you? So be clear in that. The other one is your call to action, which is funny because this is something that is very simple, and for many of us, we hear it and it seems intuitive, but it's often overlooked. Okay, if you're looking to attract capital, you need to have a follow up of some kind. You need to have some, hey, let's have a conversation. Let's talk 15 minutes just to see more about what your goals are. So the call to action is very important, because you can very well go through this whole, you can meet countless people, but if you don't have any follow up, then you really aren't being intentional. Okay.
Can
So
you
this,
give us a couple of examples of calls to action? You're in a room, either individually meeting and greeting, you're on the stage talking to the crowd. Call to action. What are you doing to engage?
so I do several things. One is I have webinars where I do deeper dives into the specifics of real estate investing. Okay, so it's one thing to say, hey, income, depreciation, equity buildup, appreciation, leverage. This is why we love real estate. But it's a completely different thing to say, here is how we determine what your returns are, and here's how we go from the gross income to your wallet, or your pocketbook. So I do webinars where I will go into deep dives on into each of these topics, and so the call to action then would be, hey, here's I love QR codes, right? It will be, hey, scan this QR code, and then it'll give you, it'll give you a link to attend one of these events. That's one thing that I do, right? The QR code
Right
pops up
there.
right there, just like that. The other one is I have a meetup, and which I just love doing meetups. So I have a meetup here in the DC area, because it gives me an opportunity to meet with people face to face, and then it also, so we have an in-person meetup, then we also have a virtual meetup. So there again, QR code if I'm on stage. If I'm having a conversation with someone, then I typically, nothing beats a business card, right? By the way, a business card with a QR code, nothing beats that combo. But so if I'm having a face to face with someone, then I'll grab a time with them. I mean, for me, I know that it doesn't have to be awkward, but you just say, listen, if it's all right with you, I like to kind of book just a 15-minute call just to hear more about you. I know that we're in this specific location where it's a bit difficult to hear kind of the nuances of your story and where you're looking to go. And so if it's all right with you, I'd just like to grab 15 minutes, 30 minutes of your time just to have a conversation that's a bit more personal. And then we can see if there's some opportunities that might be a good fit.
Let me
But
ask you
yeah.
this. You said a business card. I haven't carried a business card in years because QR codes, or texting people and taking pictures, or doing literally those apps that's like, here's my QR code, zap it and save it.
Yeah.
And do you still have business cards?
I do. You know why? Because
Your
I
gray
have
is showing.
it is. But wait, but so I have I have both. Now but the reason, so I have a digital, like a hi hello, I forgot what the brands are. So I have a digital and I have a business card. The reason though is, for me personally, I have found that I'm less likely, like I'm guaranteed to put the information in my my CRM if I have the business card. The and my CRM for me is kind of my real go-to when it comes to having follow-ups. For some reason, like with the digital, because unless I'm very intentional on adding like something before to say here's where I met them or something, or add to my CRM or something, some message to myself that lets me know, hey, you need to take it from your phone to from this digital database into your CRM, then I'm less likely to do that. Now, there are ways you can integrate though, right? So you can use things like Zapier. There's a bunch of other things you can use to where once you take the information, it automatically kicks it to your CRM. But not everyone has that set up. So for me, I have a business card. I'm guaranteed to put it in my information or my CRM.
Personally, I'm more than anything, I go with the let me text you, let me take a picture. Here's your name. Here's my name. And I'm completely lazy. So then I say, hey, assistant, please plug this into the CRM. I like this guy.
Yeah, and not everyone's big time. You're a big you're kind of at the top of the ladder, you're top of the food chain there. So it's yeah, no, I agree. I mean, if you have a system for it, kind of digital, then I think that's probably the best way to do it, the fastest way. But I love business cards. I mean, I love I can write on them as a if there's a couple of things I need to remember about the person. Certainly, you can do that digitally as well. But it just, for me, I always kind of have a card with me. My gray is showing. So, all right. Okay, so there are three things that because we're talking about educating your network, which again, I just find it to be one of the best ways to really connect with people, and also to sort of, it really kind of establishes yourself as someone who can help them. Okay, if someone's looking for cash flow, someone's looking for for tax advantages or what have you, there are things you can do to educate them and kind of help them with that. So I believe that that's one way to avoid burnout, because if you don't do that, you're having to ask questions at a time that might be an inopportune time for you. And again, I always tell people the best time to build these relationships is long before you have a deal. Okay. So
and let me just jump in real quick, because there's quite a few more people here than there were before.
okay.
What we're talking about today, there's 9 pages of information from Brandon. You can jump to this QR code. There's also a bunch of information about, like, if you're raising capital, looking for investors, what's the process? What can you do? So for anybody that is watching, here's the QR code. And now it's pretty comical, so I'm just going to completely ignore this thing. But
no, that's fine. All right.
All right. So, you're educating. I know you are actually one of the absolute best at continuing to provide that good and valuable content.
Yeah, I enjoy it. And I tell you what, we actually had, even this past weekend, we had one about underwriting, where we kind of did as a workshop, and we're going to have a few more workshops on that. But it was a deep dive into, hey, how do you underwrite a deal? And so I just enjoy doing it, and I can tell you that one of the reasons I do is by degree. I mentioned my trade, I'm a petroleum engineer, but by degree, I was a chemical engineer. And I found that a lot of the professors, because the topic, yes, it can be complex, but sometimes it was taught at a level that was so difficult to understand. But it's like once you break it down into its individual parts, it becomes much easier to digest. And so even all those years ago, that sort of awakened this passion in myself for wanting to help break down complex topics into things that are easy to understand, especially when it comes to this, because it can help people reach the next level in their lives. So, but I think that's the goal. So if you're looking to attract capital, if you're looking to raise capital and you want to connect with passive investors, you must then educate them about this, because the syndication space is still something that in the grand scheme of things is not that well known. So sometimes for those of us who are very familiar with it, we tend to think that everyone knows about this, but that's actually not the case, right? And so there's a good QR code to get you some material. So the three things
Somebody's
you have to,
asking. Plus, it's just good information.
yeah, no, absolutely, absolutely. So the three things that you need to convey, right? What is your business model? Okay, what are the returns? What are the risks? And I'm gonna tell you that the third point is becoming increasingly important in terms of the conversations that we're having with investors. It has always been important, but I think that when the macroeconomic factors really start to impact deals, that becomes more important. Now, it's something that we should put in front all the time, but I believe that now we're seeing those conversations they're more commonplace. So it has to be kind of, hey, what are the risks to this deal? What are the risks to partnering, with you as a sponsor, and so forth? Okay, the market, the structure of the deal, all these things are very important to educate your investors on. Okay.
I'd like to jump out there real quick, just being the attorney that I am. It's a necessity to talk about the risks. Everybody knows that there's risk in investing, but legally, you don't want to say, hey, you're going to make a gajillion dollars, an annualized 20% IRR. Well, that can start to sound like a guarantee, and investors can take issue with that. So, yeah, you can make an amazing return. You can also lose all your money.
Yeah.
We don't have a crystal ball. We don't know what's going on in the future. But you know what? Based on everything that I'm seeing right now in this economy, in this opportunity, with this property, this is what I believe.
Yeah. Yeah. Absolutely. Absolutely. And I think again, that's also kind of where the education piece comes in. For me, I love to, I have a ton of materials and things that I offer to investors to say, hey, look, here's how you can adequately characterize the risk, even beyond kind of what the bar is from a compliance perspective. I like to really give kind of more to say, hey, let's get real clear on what this opportunity looks like and how you can evaluate it from an LP perspective, a limited partner, or a passive investor perspective. Okay, so this is a bit of it's a bit of I guess I'll say the lighter side of this, and this is still about brand building. I once upon a time I was someone who really was didn't post on social media very much. I didn't want anyone to kind of know what was going on in my life, and for whatever reason, I was very resistant. And my gray is showing again here, Nate. But I was very resistant to building like a social media platform. But then I kind of turned it on its head and thought, well, really what I'm doing is helping people who could really use some of this information. Okay, because the benefit of social media, many benefits. One is you have a one-to-many approach to where you can put out a piece of content, value-added content, and it can reach as many people, who would see it. So you can share it with as many people as you want. You can add tons of value in one succinct kind of piece of content. But also it's a way to make sure that you are nurturing your network a bit. And so it's very simple, very practical kind of example here is a great way to have a post that makes an impact. Is there 4 things you can do? One is to have kind of I call it the hook, but it's something that will draw people's eyes to it. This is very practical, but the bottom line is as people are scrolling and scrolling, they need, you have to give them a reason to stop in the first place to even care about whatever it is you have. Look, we all have something that we want to get out of. If we're looking for value-added content, we have something that we want to learn from and benefit from. That typically comes from a solution to a pain point that we're having. And so if you can share a particular pain point that an investor might have, maybe they are used to a certain type of return, depending on whether they invested in the equities markets or whatever other type of asset class. And you can kind of share some of the benefits of real estate, again, without offering any guarantees, like Nate mentioned. But you're just kind of talking about, hey, here are the reasons why investing in a certain asset type can be a potential pain point. A potential solution to a pain point you might have in a different asset class. Whether it's, one of the things I love about investing in real estate deals is that you have a greater degree of control in terms of what happens with the asset. And so if you're someone who is looking for then a greater degree of control in your investments instead of putting your capital into a black box, then you can invest in something where you have more control. So anyway, the hook kind of captures people into saying, okay, well, let me read further. The pain is you're speaking directly to, hey, here is something that you have been looking for a solution on. I'm going to offer the solution and then a call to action. Okay. And this is about nurturing your network, but this is about offering value. And so I know this is, again, kind of the lighter topic of what we're talking about here, but it's a very practical kind of framework and a way to understand how to do it. I'm going to skip past this one because we have the main QR code that you're sharing, Nate, but there it is. Okay. All right. So real quick, there are 3 things that you need to do. So I like to call it capital magnet, right? You're attracting capital. So 3 things you need to do. One is to build a network of investors who trust you. This is all about trust, right? Know, like, and trust. And it is vitally important that you build a network of people who trust you. And in order to do that, you need to master your story. Okay. Many of us have not taken the time to see how people can resonate with various things that we've been through. I mentioned earlier about how I went through getting laid off, the impact that had on me, the fact that I stopped and took inventory, and then I took action to grow from that. You have a story that is similar to that. Okay. And so it's important to make sure that you stop and say, okay, well, what are some of the things that I've been through that other people can connect with, can resonate with, to where they feel like, okay, this person went through something that I'm going through, and they have risen above that in some way. And then you're positioning yourself then as a guide or someone who can help. And then the third thing is to nurture your network, which basically means staying in contact with them. You know, Nate and I mentioned CRM here a moment ago, which is something that if you are looking to raise capital from investors, then you're going to need to have a CRM for many reasons. One of which is it documents kind of the timing in which you met that person. So I'm going to let's see where we're at. Okay, so I'm going to stop with this one here, and then I'll kind of close off the presentation here, Nate. But okay, so there are 5 things that you need to do in order to kind of master the ability to track a capital. Okay, and I'm gonna start over here. So the first thing is you have to understand where you're at the moment. You know, I've been a GP and active investor on many deals now, and so one of the first things that you have to understand if you're going to look for an opportunity as an active investor is, well, how much can you raise from your database of investors? You know, have you evaluated just how much you have there potentially in soft commits? Because then when you go to put it in an offer, you want to feel confident that you can actually close on it. You know, there are a lot of investors who, again, they've gone to the closing table, but they didn't have kind of that confidence in being able to potentially close on the deal. They lost the deal. Okay. So you want to know what your capital raising fingerprint is. The other thing is understanding how to speak the lingo, right? So I call it the language of money. And here's what I mean. Okay, now if you're going to speak with an institutional investor, okay, if you're going to speak with someone who deals in this all the time, you can stick with the metrics. Okay, you can go up and kind of have a conversation about the IRR, the IRR, AAR, right? You can talk about your entry and exit cap rates. You can talk about the CAGR, okay, yield on cost. You can get straight to the bottom line.
All the acronyms that none of us know what they actually mean.
Yeah. And so, but if you're speaking with someone who a retail investor, kind of like an average investor, like myself or anyone who you might have a conversation with one-on-one, typically they're going to be a retail investor. Okay. And so you have to get to the really something that they can understand clearly. And that is, if you say something like, hey, look, we look for opportunities to double our investors' capital in 5 years. Okay, so we look for opportunities where based on projections, and like Nate said, based on what the information that we have available today with the deal, what we know now with the economy as we know it now, then this has the potential to double our investors' capital within 5 years. But that's a very easy statement to to share with someone, as opposed to, hey, we're looking for 15 to 17% IRR. We look for an AAR of 20%. We look for a cash on cash of 7 to 8% with an equity multiple of anywhere from 1.8 to 2.2. You get it? So it's about really speaking a language that where someone who's hearing it can retain it and understand it. So that's a big one. The other one is investor psychology. I like to talk about psychographics, right? The patterns of the person that you or the group that you're looking to serve. We mentioned earlier, if you're looking to serve engineers versus medical professionals, there is a very different type of pattern, behavior, goals, these things that you have to take into account if you're looking to raise
Can you
capital
give
from that particular group.
Can you give a couple of examples? I mean, I agree with you entirely, and I have my
Mhm.
opinions about the physicians versus the engineers.
Yeah.
But I'd love to hear you kind of what types of groups are you talking to,
Mhm.
and how are you positioning, or what are you judging their psychology to be as you're continuing to present? Or
So I'll give you one perfect example. So oil and gas. Okay, one of the groups for me that I speak with frequently are people who I either worked with directly or people who know individuals that I worked with in the oil and gas space. Okay, well, if when I'm having that conversation, I know that in the oil and gas industry there tends to be a lot of turnover, which means there are probably a lot of past jobs, 401ks that have been sort of abandoned, and they have not been sort of reevaluated, or hey, what can I do with this? So I typically will have a conversation around the opportunity to use or to roll a 401k over into a self-directed IRA and then use that to invest passively in opportunities. I also know that if it's someone who's in the oil and gas space at the moment, they typically are well paid. And so the goal then is long-term wealth, building, but it's also, hey, what can you do from a tax perspective? Okay. And so that's kind of an example of it. Really, for me, ties into, okay, what are the goals that this person cares about based on what I know about their profession. So that's kind of an example. I hope that's clear enough, but that's an example of what I'm referring to here. Is that good?
I appreciate you.
All right, no problem.
Always a little bit more information, the better.
Yeah,
Help us all understand.
sure. So the other thing is so that's for kind of the investor psychology piece. The other one is very important from sort of the mechanics standpoint, right? And that's being able to onboard capital. So I want you to imagine kind of going through the process of making sure that you connect with an investor, that you build that trust, you understand what they're looking for, you let them know what it is that you can offer, and then let's say you have a deal ready to go, but then you actually don't have the mechanism set up to onboard capital. So they say, yes, I'm ready to go. I want to invest with you. I want to partner with you as a limited partner. But you don't have the mechanism in place to do so. So there are certain tools that you would need, especially today. I would argue that the average investor today expects you to have an investor portal and a platform where you can take on certain information from them. And so that's another thing that's very important that you need to have set up. Okay. And then lastly is keeping your network warm. We already talked about that a bit, nurturing your network. And it could, because this is not a transactional thing. This is not, hey, I want to have a conversation with you up until it's time to invest in the deal. After that, I don't want to talk to you again. That's not how it works. Okay. So it's a conversation that's ongoing, because hopefully, if you're in this business, you want to be doing this for the long term. And that means then making sure you're connecting with your investors on an ongoing basis, giving them updates if you have, even if you don't have a deal, but certainly if you have a deal, making sure they're updated. But even if you don't, newsletters, reaching out to them periodically, one-on-one, doing quarterly updates, all these kinds of things that are very important. So, just kind of stepping back again, it's important because you want to make sure that you have a framework for attracting capital, successfully doing deals on a repeated basis. And so, sorry, I know I was a bit long-winded there, Nate, but again, these are the things that that are important for building your brand and kind of building your passive investor kind of
Well,
base.
I think you kind of ended at the perfect point for me to jump in a little bit,
Mhm.
because I do want to talk about, you're building your investor network, you're keeping them warm, you're providing that ongoing valuable content, you're doing exactly the types of activities that Brandon is talking about. And that's a really important component of it. But as soon as you have the opportunity, or you know what you're trying to bring investors to, you know what asset you're trying to syndicate or buy, your first step before you invest all the money into getting things organized or really pursuing is as simple as we call it testing the waters. Testing the waters means, well, you don't really have a deal ready to invest yet. There are certain disclaimers and information that you have to provide if you're providing written content. If it's just some sort of marketing information that you're telling somebody, verbally communicating, no problem at all. But if you're sending out like a pitch deck, or if you're sending out email blasts, there are these required information. This is, I promise, the last time I'm going to share it. But I do provide a bunch of that disclaimer language in just a Word document so that you know, if you're trying to send out information about a potential investment, make sure that you have the disclaimer language and you can get it all through that information. Now I promise to never show that again. But that's important. And a lot of the times it actually is provided through the investor portal. You know, I am from crowdfunding lawyers. Everything is being marketed online nowadays. It's just the way that it goes. And I will tell you that if you're raising capital, basically everybody is using investor portals nowadays. There's those strategies that you can accept everybody that comes to the table to invest. So really the ability to reach the crowd, reach social media, build your audience and be able to communicate with them, to bring them in. At the end of the day, you're building not just for your next deal, but your entire career of opportunities as well. And I know, Brandon, you've talked a lot about real estate. This has been a huge area in real estate. I just want to emphasize that, you know, right now, acquiring businesses is really where a lot of focus is. Currently, I mean, the interest rates are a little higher. It's a little bit tougher to make the numbers work with real estate opportunities. They're still out there. We're still seeing them happen, but it's definitely not like it was a couple of years ago. But we absolutely do see more and more business acquisitions because we've got the boomer class. We've got the older generations that have had those small businesses. Now they're retiring. They've got cash flowing opportunities and they're selling them. And the younger generations, Gen X, millennials, everybody in between, we're the buyers. And we can buy businesses. We can create our own empires, but it's following exactly the plan that Brandon's talking about today.
Yeah.
So.
Yeah, no, absolutely. I mean, yeah, that's right. And I can tell you, I've heard the same thing about kind of the boost in M&A activity that's taking place right now. And it'll only get, more and more popular kind of as we go forward. And I agree. The principles are still very much the same. It's still, how are you connecting with people that you would need to raise capital from, to partner with? Okay, it's very much a partnership. And how can you employ some principles to where you are sharing the information that they would need to then get on board to understand quickly, okay, here is the opportunity, here are the risks, and why are you the right person for it? So I think these principles just apply across the board for sure.
Yeah, I'm part of and do capital classes and coaching and whatnot. It's called the Epic Network, and it was started by really one of these premier entrepreneurs of America, Roland Frazier. And there's 6,000 members that everybody's out there just trying to make deals happen. And uniquely, it's all in the business acquisition space. And so we're seeing huge growth, more and more things happening. So definitely, if you are interested in buying businesses, check out the epicnetwork.com. They got their own masterminds, education, blah, 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 and everything else. But kind of a new area because everybody's been doing real estate for the past decade and a half.
Yeah, you have to check into that as well. Yeah, but that's I mean, that's an interesting point, right? Because we're seeing this shift, and I'm kind of curious too. How so the capital markets, how you guys feel kind of about that in terms of the business buying opportunities? Is it yeah,
We're
very different?
seeing it. I mean, it's different. The biggest difference is most people are in and out of real estate.
Mhm.
Our goal is to sell in 5 years. When you're buying a business, I mean, so many of them are long-term holds. These sellers, they've been operating it for 20, 30 years. And investors, they don't want to be in the deals long-term. They're always looking for what's my exit strategy as well. So in doing these business acquisitions, that's kind of the key to making it a success. And either, well, we're buying in, we're acquiring, we're improving, we're adding these systems, and then we're selling and we're out.
Yeah.
Alternatively, we're buying additional businesses that are in related industries or in similar regions, but our intention is to create a conglomerate, do a merger where everything comes together. And that's where the multi-millionaires are made, because our next step is rolling those companies into the public markets.
Mm.
Here is the secret sauce of becoming that billionaire in the near future. I can tell you, I actually know and have worked with this one guy that he literally started with a $10 million business acquisition fund. He hit things right. He bought the right businesses. He exited for $5 billion.
Oh, gosh.
And he completely did it by taking those steps of just putting it all together and then selling it to the bigger markets.
Wow. Yeah. Very, very powerful. And so, yeah, I've heard, I've even heard of people doing that sort of strategically, where they're staying in one vertical or one sector, right? And then they're kind of beefing it up and then making it a more powerful offering, but yeah, very, very powerful.
I will definitely say that I don't know how much capital you were raising, what deals you did last year, but we're definitely seeing a lot more belief and positivity in the economy. Maybe it's just how amazing the stock market's been doing lately.
Mm-hmm.
But compared to 2023, we're absolutely starting to see a lot more activity and investments happening.
Mm-hmm.
So if you're watching this, now is definitely the right time to think about, what are you doing with your career? What can you do to build your empire, whether it's in real estate, whether it's in business? At the end of the day, reach out to this guy that way. And, Brandon, at the end of the day, I mean, that's how you build an audience of investors that can truly allow you to hit all of your goals. So I really appreciate you joining, sharing, participating today.
Absolutely. It's always a pleasure speaking with you, my friend. And just really glad to be a part of your platform here, and looking forward to staying connected, but always looking to add value. So I really appreciate it.
Definitely. Well, thank you, everybody that has joined today. It's always a good time. Appreciate you, and we'll see you next time. Oh, we've got one question. So this is for you. Do you have a recommendation of a CRM and investor management platform that we should be considering?
Sure. So I personally use Get Response. I've also heard some really good things about Active Campaign. I think that's a bit more popular than the one that I use. I like Get Response because of the editor. Depending on whatever you're putting together, they have some pretty powerful editors and automation functionality. And then the investor platform,
High Level has been recommended. We still use HubSpot, but it is kind of the premium dinosaur at this point. So there's a lot more functional, affordable strategies. And I know Go High Level in whatever you're mentioning as well.
Yeah, Go High Level is a pretty big one. And you can do events on Go High Level as well. So it's actually pretty robust. In terms of Investor Portal, I use Cashflow Portal. I know Syndication Pro is another good one. There are a host of them at this point, but I really like Cashflow Portal just because they've sort of bolted on several things. One of which is a platform for passive investors to connect with you. I forgot what it's called, Palace or something like that, PALLS, I think. But that and Cashflow Portal work hand in hand, so people can kind of see your opportunities to some extent, and then you can connect with passive investors through this other platform that they have. So that and just a host of other features makes it a pretty powerful tool to have.
And I work with a number. I mean, we do so many deals. We have relationships with all kinds of investor platforms. Where we're seeing a lot of traction is with Dealmaker, Crowdfund My Deal, and Dalmore. So we've got one of the most important questions for you. What's the best way to get a hold of you?
Sure. So my website is, well, first of all, my email is brandon.jenkins.
You totally froze right there.
Oh, did I?
It was like Brandon.
At the most important time. Hold on. Am I good now? Am I good?
You're perfect.
Okay. All right. Brandon Jenkins. That's Brandon BRANDON .Jenkins JENKINS at Birch Prosper. So that's at BIRCH Prosper PROSPER.com. So that's you can email me. And that's also my website, right? It's birchprosper.com. I'm on LinkedIn at Brandon Jenkins, pretty common name. So I will have to maybe share the URL, but I'm on LinkedIn. I'm on Facebook. And those are the main areas. I have a podcast. I failed to mention that. I have a podcast called The Capital Stack. And here I do weekly interviews and a few solo episodes here and there on the market, things like that. So those are the main ways to reach out to me.
I'd love to tell just one more story before we jump in. Was when I just recently reached out to you and I called you, and it was just your number that was in our HubSpot, and you answer and you sound like you're in the gym, and I'm like, "Hey, Brandon, it's Nate talking about this Facebook Live," and you were like, "Who? What's going on?" Oh, and you're like, nope, wrong number.
Wrong Brandon.
Yeah. Hang up. And then he calls me back and like, oh, I'm in real estate as well as this other Brandon Jenkins. You're probably not trying to get a hold of me. You're probably trying to get a hold of the other Brandon.
Yeah.
Sure enough, he's right. And for whatever reason, I had his number under your, it just got confusing, but thanks, other Brandon Jenkins. Really appreciate you.
Yeah. It's kind of funny. He and I, it's a running joke at this point because people reach out to him looking for me and vice versa. So that's pretty funny. So be careful with there's a couple, or hey, I might as well send a connection request to both of us. Why not?
But they're both good guys. They're in real estate. Got it. All right. Thank you, everybody, for joining today. Really appreciate everybody that has taken their lunch, taken their time to check in and learn a little bit more. Appreciate y'all.